I got a new addition to my junior gold miners, which is West Red Lake Gold. Now, they have taken over a project that had been a failure with two previous operators. But they looked at well, part of the reason was is that the last one rushed it into production and they hadn't done enough drilling and they weren't financed well enough and they went bankrupt. Then West Red Lake Gold was able to buy that bankrupt asset at a very cheap price when uh, the gold was still a lot lower than it is today. And they've been doing all that extensive drilling. They've gone underground and they're gearing up to have full commercial production of 50,000 ounces in 2026 from their from the Madsen mine in Ontario. I like what I see, what I'm hearing out of management as far as ramping that up. They're talking about 9,000 ounces of production in the last quarter of 2025, which is very good because this is the best quarter ever to have been producing gold. And then having it in full commercial production for somewhere around 50,000 ounces. So you're not looking at a big difference between 9,000 and 12,500 ounces per quarter. And so they're almost up to that full commercial production. And because their current valuation is very low relative to comparables, I do it on 100,000 ounces. I look at what is the valuation of a company based on 100,000 ounces, and then I in this case I would have cut that in half. And when I look at that valuation, basically they should be getting for 50,000 ounces about $1 billion in market value because there'll be a high grade miner at a low cost, so there'll be a free cash flow machine. So that should get for 100,000 ounces, that's about 2 billion to $2.5 billion valuation for a high grade, high margin producer. And so rolling that back to 50,000 ounces of production, that gets me to about 1 billion to 1.2 billion valuation. And their current valuation is at about 291 million.